Hi everyone. I thought I'd like to share with you what I've been doing during this COVID-19 shutdown. One of the things that have always been of interest to me is in the stock market, of course, but I've heard so much talk about what the young investors, the millennials, the ones who are working from home or maybe not working but are home, and what are they doing. And the prevailing story I hear is that they're investing in the stock market or trading in the stock market. And perhaps that has caused or created a significant bull market in the stock market that we've been witnessing now since the COVID 19 shutdown. It brings up this paradox that people are saying, how is it that the country is in such a bad shape with regards to people being infected and dying, and lots of people are out of work, yet the stock market keeps rallying higher and higher. So I don't know if what I'm about to show you is related to that phenomenon that we've observed, but in any case, I believe the information that I'm going to present here is of some value to myself and to others who may get interested in the ideas that I've presented here. So basically, what I'm doing here is showing you a technical analysis that I had done some charting on a particular stock. The stock symbol is called ABBVIE Inc. I don't even know what this company does, who they are, and so forth, but in technical analysis, it really doesn't matter what the company is doing. All the information that you need to know in order to analyze the trading possibility is the stock price over time, the data that is that you get from your broker. This information is streamed to you from your broker, and the historic data goes back for ever since the stock was traded, and you can do it in time frames of monthly, weekly, daily, every 4 hours, hourly, 15-minute intervals, and so forth. I like to work on a daily intervals because I think it's just a slightly slower pace than the 1 hour charts or even 15-minute charts. So anyway, this is a 1 hour chart for this particular stock. And I think the date ranges from about January 10th to up to date here now. Today is January 9th. So it's about a year's worth of data plotted here. And these lines you see on the charts are moving averages, and there's some statistical things also plotted. And these things are used to kind of measure momentum in the market or relative strength and so forth. Anyway, to get to what I wanted to present. So here we notice that back in December 10th, this stock reached a new height of $109.15. And then it went through a period of correction, and it corrected down to about $101. And then it seems to start to rise again. Now, this is not uncommon. This is a typical scenario. When stocks reach a high, they tend to go through a consolidation period before it starts moving up again. Now, the question is, how long will it take before it will take out the new high? This reversal seems to indicate that the stock is still in a bull mode, which means it's trending upwards. There's an uptrend. So even with this short correction, you're expecting that the uptrend will continue, the major trend will continue. However, typically before it takes out the recent high, it'll probably go through some more correction before. So this strategy that I'm presenting here is based on the argument that, hey, in the near-term future, it may not take out this new high, and it will tend to consolidate in this area bounded by the recent high and the recent low. And that's why I have drawn these two lines on the upside and on the downside, and I'm thinking, well, between now and some time in the near future, this stock will continue to range within this bound. Okay? Another way to look at the argument that I'm presenting is to use what is called the Bollinger Band. And now, here are the same two lines, the range that I've identified. And what this band shows, first of all, the blue line that you see here is the moving average of the stock price as it advances through time. We're plotting the average value. The upper band is represents a 2 sigma deviation from the mean on the high side, and the lower band is a 2 sigma variation on the mean on the low side. So what that says is that between the upper band and the lower band, there is a 2 sigma variation in value, and that represents about a 95%, I believe it's either 95 or 97% chance that the stock price will stay within this band. Okay? And if you notice, what I've done here is I've created my band to be just outside the upper range and to be just below the lower range. So the chances of the price extending beyond or getting outside of the bands that I've drawn is less than 5%, or put it another way, there's a 95% or 97% chance that it will stay inside this range. Now, as time progresses, obviously, this mean can move up and these bands can also move up. So today's date is January 9th, or the last time this stock was traded was on Friday, January 8th. And the date that the target that I've set for which I will put on this trade is January 22nd. And I'm making a bet that between now and January 22nd, this stock price will stay in this band. And if I'm right, then I could make a profit on that basis. So let's see how you would try to make a trade to profit from this analysis. So I'll go to my analysis page, and what I'm showing you here is this stock trade that I've set up. It's called an iron condor, and I'm just adjusting it back to today's date. And basically, this stock position says I'll buy some option that says the price will stay above here. But if it's not correct, then then I could stand to lose money. But I can limit my losses by buying insurance so that my maximum loss is shown here. So here my maximum loss is about $580, but my potential for a profit would be about $420. And on the high side, the similar is a symmetrical relationship. So if it goes outside the range, then my maximum loss is again 580. But as long as it stays inside this range, my profit would be about $420. And now let's take a look at the probabilities. What this shows here, 56%, there's a 56% chance that between now and the expiration, which is January 22nd, that stock will be inside this gray area here. Now, if you notice, this gray area is outside or falls inside of the range where I could lose money. When this trade was actually put on, it was more centered, meaning the current, this is the current value of the stock as is shown here. And when I put on the trade, that value was somewhere around here, centered. And this gray area was sitting right around the range of the profit region. But as time progresses and the stock moved upwards, you can see the probability of this trade being successful has decreased down to 56%. But it's still a good trade because there's a 29% chance that it will exit in this region, and there's a 14% chance that it will be outside of this region. So 29% here, 14%, that is marked by these lines, these vertical lines, and there's a 56% chance that it will stay within these two vertical lines. So let's see how time will impact this trade. What I'll do now is to adjust the calendar or walk in the future time and see how the value of this trade will vary, assuming that the stock price stays here. So as the purple line, by the way, shows the current value of the option, the position. Right now it's sitting at $70. So there's a balance of $70 in the trade, which if I were to reverse this trade, I could walk away with $70, but obviously that's just not significant enough. As you go forward in time, this blue line will start moving towards, this purple line will start moving towards the blue line, which is the value of the trade at the end of the contract period, which is January 22nd. So let's move the clock forward. As you can see, the value of the position is increasing, and as we get closer to the contract date, you can see now that value is worth $332 if the stock price remained there. Now, if the stock price actually moved downward towards the center, it's a little higher, 347. And if we took it to expiration, and as long as it stayed within here, then I would achieve the maximum gain of $420. So the question becomes, do you really want to wait those extra 2 days? Because who knows, that's right around the time of the inauguration of the president-elect. And who knows what some crazy people might be doing during that time. By the way, if you notice, this shaded area now represents, again, a 68% chance. So we have a 68% chance that the stock can go between here and here over the next 2 days. So the question is, can I get out of this trade and maybe cut my losses or reduce my profit but increase my profit? Reduce my risk but increase my profit. And so we look at, well, what if I was to remove the insurance down here that I purchased? Because the current price is so far away from this value that I could get away with not having this policy. So I'll prematurely cancel that insurance policy, which protected me on the downside should the price go negative. But I don't believe in a 2-day period it could make such a drastic move down. So what would be the impact of doing that? And I'll pretend as if I would get rid of that insurance, which really means I would sell the insurance policy that I had protecting me on the downside. And boom, now you can see my losses would be unlimited if the price got out below this level. But like I said, with 2 days to go, this would be a significant move to bring that down to this level. Now my potential profit has jumped over to about $560. And my potential loss, should it exceed this value, is now only $330. That's the blue line. So at this point, on this date, on January 19th, I could essentially unwind this entire trade, walk away with a nice fat profit, and be safe that I have reduced my risk. Now the price of the stock could go all the way up to about $109, and I'd still be able to walk away with a profit. So on the downside, it's so far away from this downside, you really don't have to worry about that. But it's on the upside where it could breach this region. So you might decide to take profit on that date or sometime around there before expiration of the contract. So I hope this made sense, and you can see that there's these young millennials, they're figuring all this stuff out, and that's why the stock market keeps going up, because you've got thousands or millions of young people who are investing in they're using these smart techniques and options to make money, and old farts like myself, we just have to try and catch up with them. Anyway, thanks for your attention, for watching me.